What is going on YouTube? It's Sang. We are back with another one. Now, I don't know about you guys, but I'm pumped as always to kick off a brand new week in these markets. Just another opportunity for us to add quality plays to the portfolio so we can finish off this year on high. Now, as I said to you guys in the previous drop, we are deep into earnings season right now. Tons of plays coming out, showing their numbers, what they've been doing over the last couple of months. And we got a few plays in our portfolio which will be stepping on center stage next week. So what I want to do is put a little bit of coverage on these plays, give you guys the intel you need to know to continue hitting success with them and how we can maximize our returns from these plays. So as always guys, in this drop I've got an action-packed one for you. Now before I get into the first play, you guys already know, run the likes on this one for me. Let's get into the first one. Alright guys, so ahead of their earnings on the 27th of July, got Microsoft, ticker symbol MSFT. Now I don't normally bring you guys mega cap plays, but what we're doing in this one is we are taking a step back because I'm going to make sure that you guys have got the foundations right in your portfolio. I say all of you guys are going to need cornerstones for your portfolio. These are going to be the engines that just deliver you guys value over time, and this is a great candidate we've got on our hands. Now fun fact, this is the very first play that I mentioned when I hopped onto YouTube. If you go and check the price back then, we've done phenomenally well on the play. That's because regardless of what angle you look at the play, from a cloud computing perspective or a gaming perspective, this is a play firing on all cylinders. So to make sure that you guys are in on the action on this one. Now if we check out the charts, we can see this one's been on a run over the year. So let me tell you how we move with a play like this. What we don't want to do is wait for a dip in that price because you're likely to miss out on the action because of how strong they are in the different verticals that they operate in. What you're going to want to do is dollar cost average into the play. So you're going to want to set up a regular schedule, whether that's every 2 weeks or every month, investing into the play on a consistent basis. That means you don't miss out on the action. Now let me give you guys a little bit of extra game. When you see this one in the red over a week or over a month, you're going to want to make sure you get in on the action at those levels. You guys know if you're buying at a cheap price point on a play that is just guaranteed to move upwards over time, it's going to be a winning play for your portfolio. So as I say, I want to make sure you guys get in on the action. This is the type of play, we call this preservation of wealth, okay? This type of play, it's a buy and hold, it's a set and forget. You guys are gonna need these types of plays in your portfolio, so to make sure, as I say, you get in on this play. Now, going into earnings season, might hit a little bit of volatility, might open up a good entry point for those of you starting a position into this one. But I wanna make sure, as we go into next week, this one's on your radar. The next one I've got for that's Pinterest, ticker symbol PINS. Now it's been a while since I've spoken to you guys about this one, purely because they've been out of the buy zone. But in light of earnings next week, I want to regroup on this play and give you guys a little bit of strategy. Now Pinterest is a play you're going to want to be in over the next 12 months because what they're doing is they're expanding internationally. They are looking to replicate the playbook that made them a success in the US into international markets like Europe, like Latin America. Therefore, there's still upside on that current stock price. And this is a phenomenal growth play that you're going to want to be in on the action. As I say, they are posting up their earnings next week and I'm expecting a level of volatility. We saw this one pull back off their last earnings down to that $55 mark, and you guys already know we made entry at that mark and we made phenomenal returns on the way back up. So what I want to do is make sure you guys have this one on your pullback watch list. Going into next week, if we see this one pull back down to $70, below 70, the high 60s, we're making entry at that level, okay? Because as I say, tons of upside in this one. Got to remember, this is an undercover reopening play, just like Snap is, and you see the markets waking up to that play that we're in on as well. See that one move up 25% in a single trading session. As we reopen, as we socialize more, I expect more activity on the Pinterest platform, and I'm expecting this play to close out the year closer to that $90 mark. So that's great upside on this current stock price, and if we have a pullback, even better upside. So as I say, put this one on your pullback watch list as we go into next week. Our next play, that's ticker symbol BCRX, that's BCRX Pharmaceuticals. Another play I want us to regroup on because it's been a couple of sessions since we spoke about this one. Now, this has been one of the most surprising plays on the market right now just because of how resilient they've been despite all the headwinds that have been hitting these growth plays. Check out the charts, they have been consolidating very near their all-time high at the low of around $15.50, at the high of just over $17. So as I say, no matter what the market has been throwing at this play of recent, you haven't seen this one pull back as expected. This is the type of play you'd expect to move with the tide just because of how growth they are in nature. But this is the move we're going to be doing over the next couple of sessions. Okay, so Earnings are being released on the 5th of August. Now, in the run up to earnings, I'm either expecting a pullback in this one down to around that $13 to $14 level, which we're going to take full advantage of, make entry before earnings. Now, if we don't see that scenario unfold, we should be expecting a post-earnings dip in this play. Even though they'll post up great numbers, I see the profit takers lurking, so it could sit down to that $13 to $15 level, which we want to take full advantage of. Now, often we got to be patient for these plays to rise, but equally got to be patient for these plays to come down. Now, when we got into this play at $7, I saw it go into the mid-teens, and they're at those types of levels. Now we're at the mid-teens. I'm seeing this one go into the low 20s, $20, $21 come year end. So I just want to make sure you guys get in on the action on this one, because they are just rolling out their headline product internationally. The US, Japan, Europe, Israel, and they got some gems in the pipeline like 99.30, like 92.50. So as I say, I want you guys in on the action on this one. But as always, we get into quality plays at the best price points. That's how we maximize our returns. Alright, so as we prepare for a brand new week in these markets, those are the plays we've got from this one and the moves we're going to be making with. Now, as we get ready for another big week of earnings, I'm going to make sure that you guys are up to speed on the jargon and how we can use some of this to our advantage as investors to make money. Now, really, there's two key numbers that we're all looking out for when any company reports its earnings. Those are its revenues or its revenue growth, and its earnings per share. The revenues are going to be all the sales the company makes. Its earnings per share is going to be its net income after you've taken out all the costs and divide that by how many shares there are. Now, every company should be working towards delivering as high as possible an earnings per share number. It shows that they're just operating their business correctly and they're moving at a very good pace. Okay, so we'll talk to you guys about specifically earnings beats in this one. Now, I always talk about our plays having earnings blowouts, and I make sure that we get in on quality plays that are destined to just blow through analyst estimates. Now, every play in earnings is going to have analyst estimates where they're going to be estimating how much revenue they're going to be making, how much net income they are going to be making. And when a play outperforms, we call that an earnings beat. Okay, so they might have estimated 500 million in revenue. The plays come out done 550 million in revenue. Now, we always want to make sure that our plays are at least on track or beating those analyst estimates. It shows that they have got momentum, they're performing well, and it's highly likely that stock price is going to increase. But this is the key. When you see a play beating estimates and they're showing they're on good track, but you see that stock price come down, that's a golden opportunity as investors to get in on the action, as long as there's still guidance that they're going to continue to grow moving forward. That is how we've completely dominated that Snap investment opportunity. Okay, when Snap produced their earnings last quarter, it was a blowout and it guided for strong numbers, but we saw that stock price come down. As I said to you guys, make the most of it. Buy the Snap stock because the stock will rise come the very next quarter. Seen that move up 23% in one single session. So as I say, if you guys move wisely as investors, keep track of these earnings, it's an opportunity for you guys to great returns over time in these markets. So if you've been rocking the channel, you know what time it is. Great pick on C Limited. Never bought the stock as thought it was too expensive. I'll never make that same mistake again. So to wrap this one up and to share some of you guys, now C Limited, just one of the many successful plays on the channel. We are up about 40% on our money in the play since we picked them up a couple of months back, and there's still room to climb in the play. Now C Limited, that's one that is approaching $300. Now I know some of you, when you see a play at $300, you think it's an expensive stock just because it's $300, and we've got tons of plays on the market that are $5, $2, $1.50. I'll let you guys know it's got nothing to do with the stock price, how expensive the stock is. It's all about the valuation. Okay, so you could have a play that is $200, $300, and it's half at the price effectively as a stock that's $5. It's all to do with valuation. Tons of plays that are in around the $5, $3 level, they are expensive plays, believe it or not, much more expensive than your plays that are hundreds of dollars. So when I drop a play for you guys, it's in the hundreds of dollars, make sure you don't overlook it, because I put you guys on quality plays at good price points with good valuations. That will make you guys great returns. A lot of you guys missed out on C Limited. Next time you get a play, that's a couple of $100. Remember, it's all about the valuation, not the stock price. That determines how expensive the play is. Now, as always, if you've got any questions for me, drop them down below and I'll get back to you. So that wraps up for this one. As always, I appreciate you guys. On your way out, light up that comment section for me. If you're new, join the movement, and I'll catch you on the next one.